Hi friends. I really hope this video works this time. I recorded a beautiful message for you all, and it was all blurry. So I really hope this one works. Happy Friday. I hope everyone had a wonderful week. Mine was a little stressful. Um, and if you all have followed the markets and have seen the dippage action that took place, you could probably understand why. Um, but yeah, today I wanted to go over a core principle of investing. And I think this is just a great strategy to have in life as a consumer, as a buyer. If you're in the market for a home, or I don't care if you're buying clothes at a store, like I never buy anything for retail price. Like that's just a principle that I have. I don't care if it's designer, like I will never pay full price. And that's just something that I live by. And I think that it's a great important strategy to have when you're investing in the stock market or even in cryptocurrencies or whatever. And that is to buy low and sell high. Go. Okay. So here I am showing the Nasdaq Index, which is US listed technology stocks. And before I go into this, I just want to say that there is so much clickbait junk material floating around on the web and in the YouTube sphere. And people are calling this like literally every day this week. There are people who are like, stock market crash, Bitcoin crash. First of all, a 1-2% dip on the day, that's not a crash, that is a correction. It is the market blowing off some steam. And I would say that if we see this continue on for another week or more, then I would call this a crash. But here I took the all-time high from, is that February 16th to the low from today, and that's an 11.37% dip. That is a correction, okay? That's not a crash. That's not a market collapse by any means, but it's a dip. And so there's no need to freak out. No need to freak out. But what do you do when you see this happen? You actually look at your list of your watch list of stocks that you have that you've been like waiting for the right moment to buy, and then this is the perfect buying opportunity. But I think for a lot of beginners and for people who aren't used to seeing these sort of dips, you're triggered, right? So what is FUD? It stands for fear, uncertainty, and doubt. And that causes people to sell and to cut their losses and flee the markets. But that's actually the exact opposite of what you should do. And that is to buy the dip. I'll give you an example. So Simon Property Group is a recovery play that I had purchased a while back. And so despite the 3 or 4% dip today that it had experienced in the afternoon, I sold some shares of SPG and I bought Tesla because right around noon today, Tesla did a major dippage and it fell to 539. And oh my goodness, my heart was I was so excited when I saw that. I was like, yes, this is like an amazing buying opportunity. And that wasn't just for Tesla. There were so many names that I was just like salivating over. So yeah, that's what you want to do in these moments. When you see things like right here, when you see this happen, this like jump, 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 jump. Like in January, some of these names did like daily 10 to 20% leaps. Like that's when you want to take some profit. Yeah. So this is not when you want to FOMO buy in. And I'm telling you, we're going to see FOMO buying in Bitcoin later this year. I think that's going to happen a lot to some people, but this is not where you want to buy. You want to buy when the markets dip. So next. So, another point that I want to bring up, Marcus actually, so the S&P, Dow, and even the Nasdaq ended up today, which I kind of wasn't expecting that. Yeah, it was a strong movement up at the end of the trading day, and I wasn't expecting that, but I do think I want to point out here that this is a head and shoulders trading pattern, and that's a bearish signal. And we saw that, the major dippage today, but we could see this go down even more. So this market correction may not necessarily be over yet, and we might see some more dippage next week. And I would say that the main driving force behind that is rising interest rates. So here we see the 10-year US government bond yield. Today we ended at 576%, right? But right before the pandemic, we were hovering around 2%, and the Fed has come in and basically artificially lowered interest rates. But now that inflation is kicking back in, people are going back to work, economies are opening up, people are beginning to spend money again on fuel, food, and shopping, and all of that good stuff. We could see this go up pretty dramatically to 2%. Jerome Powell, yesterday, he said that the Fed won't do anything, won't step in to control rates until something dramatic happens. So maybe this will go up to 2.5% before we see the Fed step in, and the market will just have a further tantrum. So be on the lookout for that. It's, it is, I'm kind of 50-50. It could go either way. We could see a little bounce back up next week, or we could come back down further. But the important thing is to zoom out when you're in doubt. So this is the 5-year price chart for the S&P 500 index, and I've placed this here just to show you that if you're investing in strong US companies, like you really can't lose over time unless you're buying junk, right? Like you really can't lose over time. So in the past 5 years, the S&P has doubled despite this dip. But if you zoom out further, so this is the low, capturing the growth from the low in 2009 to today. So that's about a little over a 20-year period. And the S&P has more than 4x. So I really don't think, if you're looking at longer time periods, I think it gives you reassurance that these like little dips along the way, these 5, 10, 15% dips aren't major. But it is important, again, to choose strong stocks, strong companies, but also to execute well, to buy low and sell high. Because if we go back to this 5-year chart, this is the low point from last March. And there was basically no real change from May of 2017, right? So if you had entered the market at this point, a few years later, you would have been sitting at the same point, which is kind of unfortunate. But here, if you saw how frothy the market got and you sold out at some point here, you would have made a profit, and then you could have gone back in around here, repurchase, and then you would be sitting at even greater profits today. So execution is really key. It's important. Yeah, so I think that's all I have for today. Please like, comment, and subscribe, and let me know if you have any specific questions and content that you want me to go over. Again, I'm here to be helpful. I'm here to be a resource for you. I've talked to a few friends this week with very specific questions that they had about investing and what they should be doing. And I would love to help you in your journey. So just let me know how I can be helpful. Yeah. So have a good weekend, everyone, and I'll see you all later.